Hello, everyone. Welcome to another live trading session. Today is Monday, August the 14th, and we're going to jump right into it and see where we're at. As usual, we are going to start and take a look at the numbers and see where we stand at the moment. And to do that, we're going to take a look at the delta, theta, buying power usage and stuff. So let's start with the VIX. VIX is at 1502 and 1502. We have delta 48, theta 45. So 48 and 45, 48 and 45. For our buying power usage, we have to go to capital required. All right, capital required. And remember, we only look at the MES because the other ones are some ETFs and VIX. So 16% buying power usage, 16%. So we're good there. The Netflix 40, 192. And the theta is just, looks like I deleted the formula there by mistake. Okay, we're at 0.11. And we have 15 trades going on. So looks like we're pretty good on all the numbers. This one flashes orange, which means we could take a little pause if we want to, but I don't think we'll do that. We'll go ahead and put another trade, but let's take a look if there's anything we should be closing. And we can, there are two ways, obviously. We can take a look at the platform, but we can also just take a look here at the MES, just to see at the sheet with all the trades, just to see if there is anything that's coming near the expiration or something like that. So as you can see here, the upper number here is the days to expiration for the put debit spread, and this is for the naked puts. So we have a couple of ones that are nearing the expiration on the put debit spreads. And if we take a look here, on the positions tab, we can see that we have, for example, this one here. This is one of the full tranches, 1, 2 ones, and the put debit spread is expiring in 4 days, and we still have another 30 days to go, 32 days to go naked puts. But as you know, we don't want to be in the naked puts once we close or once the put debit spread expires, which is in few days. So we have two trades like that, like this. There might be something else, but these two are the closest one. So let's take a look at the P&L open since open. So we're at 87% on this one, and we are at 84 roughly on this one. This one, if you take a look here, 76, it tells us that we could close it anytime we reach 76%. And on this one, there is nothing, so that means it's a default at 80. So both of these are ready to be harvested, and we've been going a little bit longer on this one, 63 days. This is because of the holidays I took and stuff, so I didn't open any new trades, but instead I let some of the other trades run a little bit longer. So 63 days here, 55 days here. I think we should be closing this one now, because with only 4 days to go, we'll definitely be closing it in 4 days at the most. But we're happy with 87%, and should the market turn down in the next couple of days, we would just be collecting less profit, and it's unlikely that we would be collecting much more in the next 4 days. So let's take a look here. Let's see what we can do if we're gonna close this one. So first, it says 270, so we should be paying that, but let's see if we can maybe get by paying a little bit less, which is very unlikely, but it doesn't matter, we just gave it a shot. So we're going to replace this one. We're going to go back to, okay, it looks like it's getting away. We might have to chase it a little bit, but this is, the differences are small. We don't mind, we just want to close it. And so let's put 85. There you go, 285. So we closed that one. Let's see. All right, market's going up. So should we close another one, or should we? Well, maybe we can leave this one for tomorrow. We closed one, and now let's go ahead and open a new one-to-one tranche. So we will most likely be looking at 78 days for our naked puts, because at 67, 9 delta, let's see, 9 delta would be paying us. Yeah, we could consider this 1950, but we're pretty saturated here. We have 1, 2, 3, 4, 5 trades. So I think instead we're gonna go to 78, which is a good number. We like to be in the 70s for our naked puts. So over here, the nakeds are paying almost 21, 25. So let's do 2 of these, and let's see if we can get them close for, well, let's do the same thing. I don't think that's gonna work. So let's just go and see if we can even get it at this price. Probably not. Probably gonna have to go slightly. So yeah, you see the mid is 237, we're 275. So we're gonna just lower it a little bit to try and get it closed. All right, 220, 225. So now we're gonna go and do our put debit spread. So this 46, it's right about ideal duration. And if we take a look here, 78 minus 46, we can use our little spreadsheet here, 76, not spreadsheet, I'm sorry, the little cheat sheet. But before we do that, we go right here, 78 minus 46. So the difference is 32 days. So 32 days would be right here. So it means we should be paying 20, but maybe a little bit over, it's fine. So given the fact that 20% that is from the naked puts, right? And given the fact that we collected, what was it? I think 220, I'm sorry, 25 times 2, and then times 0.2, 8.1. So, 8.5, even up to 9 should be fine. So let's see what we can get for that amount in 46. We're going to start a little bit above the 4,000, which was the naked puts, 4,000. So let's go here, 4,000. So let's go roughly, somewhere in this area. Let's see what we can get. Yeah. So let's start here. So that's 41.25. So 38.25 would be roughly, well, not roughly, would be exactly. Oh, look at this, 850. That looks really nice if we can get it at that price, but that's unlikely. So let's just up it up a little bit and see if we can get it closed. Right. Let's leave this for a minute and see if we can get filled, and we'll come back to that if not, and do some changes. In the meantime, let's go ahead and record a new trade. At least start recording new trade. So if I remember, it was VIX was around 1502, the MES 4551. 4551 today is 14,823, and we did 4,000 for our naked puts. We still don't know if we're going to be able to close those strikes for the put debit spread, but we can go and record this as well as 2025. And let me just make sure that that was correct. 2025. That's right, 2025. This is what we got. Let's see how our things are working here. So see, we are trying to pay a little bit above the mid price, and it's still not working. So let's try one more, but we're not going to be paying more than 9. We're going to change the strikes if we have to go more than 9. Okay, no, that's fine. 41. So we got that. So we got 46 days. It was 41.25 and 38.25. And we paid exactly 9 for those. So this is perfectly fine. We paid a little bit over 20%. So we should be able to close it at, after, once we reach 77%. Obviously, in time of crisis, we will be closing it at a different percentage. And if we close it with less profit, we would then be closing also our put debit spread, which should make up for some of the difference or help us lose less if the market pulls back really strong. What was I going to say? Yes, we now need to record our put debit spread expiration and the amount collected. So 202.50 on 29.9, and we go here. We go 29.9, 202.5, right? And remember, this is for our negative delta trades. We are just recording how much we are collecting in our positive delta trades, which is all of our 1-to-1s, because this way we know that at least 50% of this will be pure profit should the market go up. And since we can't lose on both sides, if we put any negative delta trade with expiration on 29th of September, it means that we can only lose on one side. So if we spend a portion of this profit on the negative delta trades and the market continues to go up, okay, we paid a little bit for some delta balancing and a small hedge. And if the market goes down, this will help us offset any losses on the positive delta trades, at least a little bit. So that's on that. Let's take a look at the Greeks now. Once we let's just record the trade that we closed, and let me just refresh that right here. So what we closed was this one, 3,800, expiring on September 15, 285, 3,800 expiring on, let's see, that's the one right here, 3,800 expiring on 15/5. Okay, so we paid 285 on 14.8. So this was a trade that gave us 126 in net profits. This is after paying for commission, after paying for the put debit spread. And again, the math on this one is pretty simple. We collect 220 between the two naked puts, and then we use $55 to pay for our put debit spread. In addition to that, there are some closing cost charges, like they're roughly $10 for all of the trades. So once we closed this one for 285 and deducted the rest of it, we ended up with 126, which is, if we go to the right, it's a little bit light on daily profit because we kept this trade going on much longer than necessary. We could have closed it, days ago, maybe even a couple of weeks ago, but it doesn't really matter. We got profit, we closed it, and we moved on to the next trade. So now, if we go back here, the trade should update itself to 15, right? So we're back to 15. So now we can also update the buying power and the new delta. On Tastyworks, you do need to go and refresh this because sometimes it doesn't update, as you can see. So 16.5, 51 and 45. So 16.5, 51 and 46 now. Okay, that's cool. 55 and 46. So now we'll leave it like that and we're fine. So technically we could be putting on another trade, but we don't want to be pushing anything. So we are doing one new trade per day if the metrics allow us. And we can go up to basically 17 trades because this number is a little bit over 16. So we have more room for more trades for the rest of this week. I think that's all I have for today. And thank you very much for watching. And hey, if you didn't subscribe yet, please do so. And I'll see you next time. Thank you.